Are you struggling to raise capital for your new fund or syndication? Today, we're going to show you how to find your first investor. A lot of entrepreneurs who are launching a new private fund or real estate syndication get stuck in the early stages because they struggle to land their first investor. The good news is once you close that first investor, you get so much momentum and things really get a lot easier from that point on. Still a struggle, mind you, but it gets a lot easier once you get the first one in. Now, on today's episode, we're going to give you the real world playbook to raise your first dollar of capital. Welcome to Fund Playbook. This is a show that's all about how to launch and raise capital for your very own private fund or real estate syndication. I'm Jimmy Atkinson, and I'm joined today once again by my co-host, Andy Hagans. Andy, how you doing, buddy?
I'm fantastic. I'm really excited for this one. This is our first live stream where I think we've gone public and we've invited our entire 22,000 closest friends that are on our email list, right?
That's right. Yeah, this is our official launch week. We did a smaller show last week, right, Andy, to like a soft launch small group, but this is the first time that we've hard launched it to social media and our big email list. So it's really exciting to get underway with this is now episode 3 of the show, but it's really our first one with a truly live public audience. And for anyone who's new to the show, Fund Playbook is a show that's all about how to launch and raise capital for your very own private fund or real estate syndications. And we release new episodes of this show right here every week. But we're not just a show. We're building a community of like-minded entrepreneurs, and we're invited, and you're invited, I should say, to join us here. And we want this community to be interactive, right, Andy? We want to get your feedback and be able to answer your questions in real time on this show. We go live every Thursday at 3 p.m. Eastern time. And if you have a question for us, that's why we're here. That's why we're here live streaming it. This isn't pre-recorded. So if you have any questions, submit those questions using the chat feature on YouTube. I'm going to turn my attention to my screen over here to see when we have anything, and I'll put those questions up on the screen. You can submit your questions anytime before or during the show. Now, and see, we already have a couple questions that have come in, Andy. And I'll put on screen right now the comment from me that says, hey, submit your questions here in the live chat. But moving on to today's first question, Andy. And we get this question all the time, right? If you're launching a new fund or real estate syndication, and especially if you're a first-time sponsor or fund manager, how do you close your first investor? Andy, where do you start?
Well, I think the real world answer is friends and family is where most people start, right? Statistically, anecdotally. If you think about a private fund or real estate syndication, if it's your first time as a sponsor, if this is your first deal, if this is your first private fund, you're really a startup, right? And similar to any startup, you know, if you think to Bill Gates or Steve Jobs or Facebook or whatever, any of these, even tech startups, usually that first dollar is like angel capital, is from friends and family. And I found that is often true in the real estate world when folks are raising their first fund or in any kind of private equity. That first dollar comes from friends and family. That's really where I think most people start. That isn't to say that's where you have to start, that you have to have friends and family, you know, as your first investor from that group. But I would say that's where the vast majority of folks start. Would you agree with that, Jimmy?
Yeah, Andy, I think that's exactly right. I would actually say it's kind of this is kind of a two-part question, I guess, right? So one is, hey, where do I start? Like, where do I get my first investor? I should actually suggest that before you get your first investor who's outside of your inner circle, go to your inner circle, and you should start with yourself, right? So I would say that investor number 0, I'll call that, your 0th investor should be yourself or your family or close friends, right? Because it is almost impossible to solicit interest from the general public in your investment opportunity, right, Andy? If there's no dollars in the door yet, and you're just asking, hey, can you be my first investor? One of the first questions that LPs, limited partners, or investors in an alternative product might ask is, well, how much capital have you raised so far? How many investors are in? How much money have you raised so far? So before you even take that step to find your actual first investor outside of yourself and your inner circle, make sure that you have skin in the game, or that some people close to you have skin in the game. Because without that, it's really just impossible to get that first investor. Right, Andy?
Absolutely. And there's a couple of concepts that I want to talk about. I think where a lot of people get tripped up with this concept is you're closing your first investor is hard. It's honestly, it's the first dollar is be after your own money. Jimmy, as you point out, you should have your own skin in the game. That builds trust. But beyond your own money, raising that first dollar of capital, that's generally going to be the hardest, unless it's your mom, just writing you a check, to be nice. But um, you need to sort of start the momentum, understanding that, like getting that snowball rolling down the hill, it's going to gain momentum. And once you close the first investor, it's going to be easier to close the second. Once you close the second, it's going to be easier to close the third. And that's for a couple of reasons. One, it's a signal of trust to other prospective investors that one or more investors have already given you money, right? We're social animals, we're social creatures. And that's a big part of how we trust. But another thing, we talked about in our previous live stream last week's getting started, you want to put pen to paper, put together an executive summary. And in my opinion, and Jimmy, I want to get your thoughts on this, but there's so many things that are outside of your control, right? When you're trying to close a prospect with any kind of sales process or any kind of capital raising prospect, you can't ultimately control their decision. What is in your control? What is in your control is that you're prepared, right? Is that you have an executive summary, that you have a deck, that even if you're pitching friends and family, you approach it like a professional. And I think that exercise, number one, going to build that internal confidence in you, and that's going to make it easier to raise capital in any context. And also, I think you almost owe it, even if they're friends and family, you owe them a professional presentation and a fair deal, right? You can't just assume like, oh, hey, Jimmy, we're bros, so you'll throw me $50K for my real estate deal, right?
No, I might, because we are bros, but most people know. I think I take your point there, Andy. And so let's actually talk about some concrete ways. Let's assume, Andy, that we've gotten our inner circle to fund the first dollars into this investment. Let's say we need to raise, I'm just going to make up numbers. Let's say we need to raise $25 million, and we've already pulled together $1 million from friends and family and our own bank account. Just
That's a lot. Hey,
hypothetically.
that your deal's going pretty good so far.
So you're already
Jimmy.
off to a good start.
Yeah.
Let's also say that you've got a lender lined up and you've got a 50% loan to cost or loan to value if it's an existing building. So then you've already got $13.5 million. And so you're really looking for $11.5 million, which is still a pretty good chunk of change, pretty good amount of equity that you need to raise. But you've already got a really good foundation to work with, because you've already brought in $1 million of equity of your own. You've got $12.5 million financing lined up. Where do you go to find that first, second, third, fourth, fifth, etc. investor? Where are some good ways to look? And I'll turn to you in a second, Andy, but just two main channels that you can use. Okay. One is to go after retail investors through the RIA and broker dealer community. Okay. And then the other way is to raise the capital yourself directly from high net worth investors. There's some other ways too, by the way. You can get institutional investors, you can get qualified purchasers. But those are the two main ways that most mainstream private funds of that size would raise capital. Andy, what are your thoughts, or which route do you want to go down first here?
Well, I mean, I think most of our audience, like realistically, most startup type of funds, I think in today's day and age, a lot of them are going to be going that they're not going to be going to a broker dealer, right? They're going to be using their network. And if you think about how a lot of folks get into like their first real estate syndication or their first private equity deal, they're working in a profession, right? They might be a commercial real estate broker, they might be a banker, they might be in the, some kind of player professional in the real estate industry or in the credit industry or whatever asset class that we're talking about. So they should have a network, but you and I were really big believers in this idea that to raise capital, you have to tell your story, right? Because investors, LPs, they don't invest based on numbers. Almost, I mean, maybe a few exceptions do, but the biggest factor that you and I have noticed is, and this is with talking with family offices, ultra wealthy all the way down to retail investors, is a story resonates with them. And ultimately, that's often what gets them to write that check. Is that's the difference maker, right? Why am I investing with this multifamily fund versus that one? Well, I know the story of this one. And so I think that's where, going back to being professional, a PowerPoint presentation, a deck, an executive summary, all of that prep work you do before you go out and raise that first dollar of capital, that's helping you tell your story, right? So I think a lot of people get stuck. They have such a hard time raising that first dollar of capital, and they can start to obsess over things that aren't in their control, right? And what I would really counsel people to do is focus on what's in your control, which is being professional and really detailing why this is a good deal, why this is a good investment opportunity. And then focus on, well, how can I tell this story over and over? Because if you have a good deal and you have a good story, sooner or later, your investors will find you. And yeah, the first investor is going to generally be the hardest, that first dollar of capital, but it does get easier.
And you do have to go. I mean, they're not going to find you immediately, right?
Yeah.
I was talking with somebody the other day, and I used the line from that baseball movie, Field of Dreams, Kevin Costner, right? If you build it, they will come. And that's true to a certain extent. At a certain point, once you get a little bit further down your journey, you got to build something. You have to build your investment thesis. You have to build your initial capital base, get your financing in place. If the deal needs financing, you need to build your pitch deck. You should have a website, all that stuff. But that alone isn't quite enough. You do need to do some outbound marketing when you're first starting off, right, Andy? And some ways to do that. Just talking about marketing directly to investors, I'll just rattle off a few places where you can go. There's numerous GP to LP match services or match websites out there. If you do a Google search for GP to LP, we'll link to a couple of them in the show notes for today's episode at fundplaybook.com. You can get listed on Equity Multiple. You can do crowdfunding. There's numerous crowdfunding platforms, CrowdStreet, Yield Street, Realty Mogul. There's a few different ways that you can get in front of investors who will come to you directly if you get in front of them. And then I would say, if you're going down the broker-dealer RIA channel, that route, few ways to go about doing that is, first of all, know that that's going to be costlier in some ways because you have to pay commissions, especially through broker-dealers. You'll end up having to pay them finder's fees, oftentimes 5% or more. But some good ways to get in front of them are to go to some big trade shows, including ADISA and IPA, Blue Vault, FactRight. Those are some of the biggest. Get a due diligence report created for your fund or investment opportunity. Real estate syndication, you can do that through FactRight, McLaw, Buttonwood are some of the big names there. So I've rattled off a lot of different strategies, a lot of different ways. And over the course of the lifetime of this show and the course that we're developing, we're going to drill down into much finer detail on all these points, but we're kind of just painting the 30,000 foot view for you right now. Andy, I don't know if you had any more last thoughts on this big topic of how to find your first investor or investors.
Yeah,
otherwise we can move on to the next topic.
Yeah, one other comment is, some of the strategies you mentioned, Jimmy, they're going to have a different upfront cost associated with them, right? Setting up with a broker dealer or getting you're offering professionally due diligence. That's probably going to have like a 5-figure setup cost, even outside of like commissions that you're paying to a broker dealer. So know that going in, but I think there's a lot of, especially when folks are first getting started and maybe they're just syndicating their very first real estate deal or their very first fund. It's a pretty small fund, pretty small raise. A lot of times it's just through their personal network, friends and family, but also their professional network, because whether they're a commercial broker in real estate or whatever they've done in credit or whatever their asset class is, they have that network. So if you think about it, they've been doing that networking and sort of building their quote unquote CRM before they ever launch their offering. By the time they launch their offering and they're, technically able to raise capital, they've already been laying the groundwork with again, developing that list of leads, developing that CRM for, in many cases, years. Actually, I think in most cases, years. If you're to the point where you're going, I'm going to launch a fund, but yeah, I don't have any network. Well, I don't have any friends or family. If that's the case, very sorry to hear that. But I also don't have a professional network. I don't have business contacts that trust me. It's like, well, then you're not ready. Like this probably isn't for you if you don't even have that circle, place to start?
I think that's a good point, Andy. The prerequisite to raising capital is to have some sort of inner circle, have some sort of network that you can raise from first so that you can get those first dollars in the door. And again, financing is a really big piece here. Getting that financing in place. Maybe you don't have the money in yet, but you have the term sheet in place that you can show to investors like, hey, once we get to a certain point, we're going to execute on this loan. That's huge. So you need to build those relationships first. I think that's obviously a prerequisite before you start raising capital for your own private fund or
Jimmy, a question for you.
Mm-hmm.
Do you think so? I think that again, that first investor, it's an intimidation factor, I think, for a lot of first-time fund sponsors, real estate syndicators. It's like, but once you close that first investor, it gets easier. But do you think closing that first investor is easier or harder than people think it will be?
I think it's harder. And I think it's harder in today's current market cycle also, Andy. It seems like there's just been a pullback in capital allocation from investors over the past few years. Economic uncertainty, higher interest rates, inflation. The stock market's roaring, or it has been for the past few years. But what I've seen is there hasn't been as much transaction volume and investment activity across a wide range of alternative asset classes, especially real estate, over the past few years. So I would caution anybody before they think it's going to be a piece of cake. You might have a great deal. You might have a great story, great website, great pitch deck, a great team with a great track record, great network. That's a solid foundation. But it's still always an uphill battle. It's always a slog. It's not easy in the year 2025, at least, raising capital. It's a lot of work. It's not impossible, but it is a lot of work.
Yeah, Jimmy, when you mention it's always a slug, I honestly think it's not so much the time factor, it's mentally taxing. Because I see fund sponsors with they need to raise $100 million. They raise the full amount. The round is fully subscribed, and then I think in the last episode I mentioned a fund manager I was talking to who raised like $100 million. He's like, it's always a heavy lift. It doesn't matter how many times I've done it. Doesn't matter how good my track record is. And he has a sterling track record, like very, very impressive track record. It's always a heavy lift, but I don't think it's like it's taking 50 hours a week, for, years at a time. Right. It's just, I think maybe it's just a part of because a lot of people, if you're not in sales, like it feels like sales, right? I mean, it is sales.
It is sales. Yeah.
If you don't love sales, I think doing sales is just sort of mentally taxing. But if you can get in that mindset of confidence and like, what I'm really selling is trust in me, and I have a story and I have something that's worth investing in, and you can kind of get over that and enjoy it a little bit, it doesn't have to be so taxing. I think it can even take it from a guy. I used to hate sales and I thought I'm never going to like doing anything sales related. And I've learned to enjoy it. 2 decades into my career, I'm finally like, you know what? I kind of like business development. I kind of like sales.
That's why we pay you the big bucks around here, Andy.
That's
but
right.
Yeah, I think the other thing to remember is, especially if you're first starting out and you're just trying to get that first investor or that first group of investors in the door, it is so much work at the front, but that work is front loaded. And the more you do, the bigger the snowball gets. There is a real snowball effect to finding an investor, because you just consider this first deal that you're working on, it might be really hard getting 10 or 20 investors in on that deal. But if that first deal works out and you are offering a second deal, well, guess what? You already have a CRM, a base of 10 or 20 investors. Those are the first people you should go to. And you're going to have a much easier time closing an existing investor than you are going to have going out to finding a new investor. So just know that if you're starting from zero, no investors in your Rolodex, it's slog to get to the first 10 or 20. But after that, you've already got 10 or 20. You can keep going back to them. And the snowball just kind of starts rolling downhill at that point. Never easy, but it does get easier, I guess I would say.
Jimmy, even in that first 10 investors, because, I'm really focused on that, the first investor, the first 2, the first 3, the first 5 investors. I think sometimes it's hard to think long-term about like, oh, how easy my 4th fund will be when you're trying to get that first fund launched and you close your first capital raise. Even those first 3 and 5 investors, the second one's generally going to be easier once you have the first investor. The third will be easier once you have the 2 because of that that social trust thing. So, we really want to have a balanced perspective here, which is understand it's going to be challenging, but at the same time, and it's going to take some time, but it does get easier.
Absolutely, Andy. It's hard at first, gets easier over time, and hopefully we enter a different phase of this market cycle at some point soon. It becomes easier and easier for a variety of reasons, Andy. But let's move on to some of the comments we have in the chat, because I wanted to read a few of these. Sal's watching us on LinkedIn Live right now. He says, "Hey, Jimmy and Andy from Las Vegas." Hey, Sal.
Hey,
thanks
Sal.
for reaching out. Thanks for watching. Good to hear from you. And then Christopher says, "Hello from Atlanta, Georgia." So we've got a pretty good audience here. Andy, if you have any questions or comments, don't be shy. We go live every Thursday at 3 p.m. Eastern time to take your questions about starting a fund or real estate syndication or raising capital for it. Any questions along those lines, feel free to reach out or just say hello. We won't bite. But let's go to, I got a question here, Andy, from Darren. And Darren asks, can a fund have both OZ and non-OZ monies, 1031s, etc.? And Andy, OZ here in this context, for those who don't know, refers to opportunity zone. And I would just say that, first of all, the short answer, Andy, here is yes, absolutely. And what we want to talk about here in regards to this, Andy, is a capital stack. How do you form a capital stack for a particular deal? And I was kind of hinting at this in my setup of the last question we talked about, Andy, where it's a $25 million total project cost. You've got a 50% loan to cost construction loan, let's say, which is pretty low, conservative loan to cost loan. But I don't think there's too many financiers who are providing anything in the 70s or 80s anymore, especially for a first-time fund sponsor, right, Andy? So 50% loan to cost loan. So now you're raising $12.5 million of other capital. And where does that other capital come from? Well, mostly it comes from equity, but it could consist of tax credits or local tax incentives or tax abatements offered by your county or your city. Could be tax credits from the federal government, maybe affordable housing tax credit or some other HUD loans, or who knows, right? I'm not an expert on that stuff. I just kind of know there's a whole alphabet soup of different credits and incentives you can go after, both at this federal and state and local level as well. But then with regards to just equity, right, you can bring in some, if in this example, it's an OZ deal, you can bring in OZ equity, but there's nothing to say you can't bring in non-OZ equity into the same deal. It wouldn't get the same tax treatment as the OZ equity would. But suffice it to say, your capital stack could look any one of a number of ways. It could be all equity. Some people do that. It could be a combination of debt and equity. And then within the debt, there's different tranches of debt, and within the equity, there's different tranches of equity applying to different investors in different programs. But Andy, curious to hear what you think about putting together a capital stack. What am I missing here?
Yeah, no, I was looking behind me somewhere on my bookshelf here. I have Building Small, which was a development book that I just finished reading. And it's interesting because, Jimmy, as you were talking about all of those different creative strategies to put together that capital stack, beyond just debt and equity, right? You can have different types of equity, you can have different types of debt, then you can have all sorts of incentives and tax credits and things like that. My first reaction is always, having different share classes, for instance, that's adding complexity to a deal. And right, it's more legal paperwork, it's more just work overall to offer that. And often, you got to think about it like, is this deal big enough to justify the complexity of having all of these different, share classes and all these different sources of capital? But a lot of the case studies in this book, and Jamie, maybe you can bring it up if you can find it on Amazon. I believe it was called Building Small. But what intrigued me about a lot of the case studies is they were basically, almost all of them were 7-figure deals, $4, $6, $8, $9 million bucks. They weren't like 50 million, $100 million deals. Because the whole concept of the book was on smaller deals, smaller development deals, like infill type ground up construction. And so many entrepreneurs are putting together, I hate to say it, but they're kind of like scotch tape together, duct tape together capital stacks, but you do what you need to do, right? Like, you absolutely do what you need to do to close that first deal. So if you need to be creative to get somebody so that they can 1031 into a deal, if you need to get creative so you can get a $75,000 or $50,000 local tax credit, or, they may not be huge sums of money, but the thing to keep in mind is that, Jimmy, as you pointed out, each subsequent investor and each subsequent deal gets easier. So that's probably, Jimmy, that might be the best way to go about your first deal. I mean, of course, we all, if you're a first-time sponsor, you're hoping that you have a deal. You get one in high net worth, ultra wealthy family. He says, "Oh, you need $2 million bucks? Great. Here's a $2 million check," and you're done. One investor, you're done, right? And maybe that could happen in a real bull market. But the truth is, I think a lot of first-time funds, first-time syndicators are everything in the kitchen sink in their capital stack. And if that's what makes it pencil and that's what gets the deal done, I think that's okay.
Yeah, Andy, that's yeah, Andy, that's a great point you bring up there. Sorry, I had a little technical glitch here, but yeah, that's book. I had it up on the screen a moment ago, and we'll make sure we link to it in the show notes for today's episode as well. That's Building Small, a toolkit for real estate entrepreneurs, civic leaders, and great communities. Andy, we had another question come in. I wanted to put up on the screen. Actually, this one we got via email a while ago, and curious to get your thoughts on this one, Andy. This person asked, and sorry I didn't get the name on this one, but the user asked, "I know raising capital was a real struggle for people in the second half of 2023 and in 2024. Andy, in your opinion, how is 2025 shaking out? And do you think it's easier now with some new optimism in the economy? And where does that new optimism come from? Also, I'll add in that as well."
Well, it's interesting, Jimmy. This may sound like a cop-out, but I think it just depends, and it's market by market. It's like city by city, state by state, sector by sector, like certainly in real estate. So I had something I retweeted just the other day. This was from Strip Mall Guy, and he tweeted out, Matthews is saying that January, this is commercial real estate volume, is up 50% year over year. And he heard 20% year over year at another large brokerage that's up 20%. CBRE sees lending momentum up 37%. So those are three, one of them is hearsay, but two other data points that 2025 was off to this great start. That was January. And then what did we have, Jimmy, earlier this week? We had the hotter than expected CPI print. And then now it's like everyone is, take a deep breath. Are we going to get any interest rate cuts? Because certainly in real estate, maybe not in every asset class, but certainly in real estate, we're highly leveraged to that. So I would say, as far as the capital raising situation, as far as the momentum that different private funds have right now, for me, it literally just depends on the person I'm talking to. Because one fund manager might say, things are still pretty slow, just like they have been for the past 18 to 24 months. And then others, I was talking to my friend, this was like 2 weeks ago, and I just said, 2025 off to a slow start. And he was like, "No, not really. Actually, we've been really basically since Christmas, we've been real busy," which surprised me. And so I think maybe it's still early in the year, but I kind of wonder, Jimmy, if we're in a little bit of a recovery, if that recovery, and I think this is true of all recoveries, if it kind of catches on in certain markets and in certain sectors much earlier than in others.
Yeah, and it might, right? I don't pretend to be an economist or an expert on which area is going to recover faster than others. But hey, if you, our viewer and listener, have any insights into that or anything to point to, don't be shy. We got the phone lines open, or the live chat is open. So please submit your comments and questions in the live chat, whether you're watching us on YouTube or LinkedIn. We're happy to hear from you. Andy, I wanted to shift gears to a different question that we got in the other day. And it was, let me see if I can find it here, actually. Let's see. First of all, Darren chimes in and says, thanks. So thank you, Darren, for
you got it, Darren.
For watching us live today. Really appreciate it. This question kind of pertains to the overall topic at hand today, how to find your first investors This person submitted this one via email, and he asked, I'm raising capital for my own deal. It's great, right? Is there a website where I can advertise my fund to investors? And I rattled off a few earlier, right? Andy, CrowdStreet, Realty Mogul, if it's a real estate project, Equity Multiple. There's a handful of others. There's LP to GP match services. But Andy, what are your thoughts, and what are some of your favorites?
Is there a website where I can advertise my fund to investors? Well, my favorite one is called gmail.com, or maybe I should say MailChimp, and YouTube and Apple and Spotify. You know, if you do webinars or podcasting, Jimmy, I think you hit the nail on the head, is that there's some of these, specific websites that are, kind of like matchmaking type platforms for GPs and LPs. But I also think increasingly, it's not universal, but much more so than 5 years ago. And certainly new funds that are entering the market, new syndicators that are entering the market, they're getting their story out online, right? I mean, if you're in the United States, you generally, you have the whole nation, right, to raise money from. You don't just have to go to your local country club like the old days and, talk to the surgeon here and the dentist there and, hey, I'm syndicating this deal. The more, in my experience, the more compelling your story, and the more you know your stuff, we'll talk about your story, talk about your stuff, talk about your strategy, find a way to put, content out, like the content that we're putting out right now. You would be surprised. You put it out there, you might, start publishing videos on YouTube or start building your email list. You might only have 300 subscribers on your email list. But if they've opted in to hear what you have to say, those are absolutely, like, that's a gold mine in terms of, prospective investors. So I think really a website where you can advertise your fund. I personally, you can definitely advertise, but advertising and sponsoring things gets expensive. I think the more cost-effective strategy, Jimmy, is to tell your story, right? To pick a medium, to pick a channel where you're comfortable, whether it's email, whether it's writing reports, whether it's, talking on YouTube and live streaming like we're doing right now. Pick your channel and talk about what it is that you do, not just your own offering, but just the strategy. And that way you let your people find you.
Yeah, that's exactly right, Andy. And it takes time, right? I mean, it'd be great if you could just get your fund structured, get a pitch deck in place, and then go out and start raising capital immediately. And you can, right? You can go to some of those websites. By the way, we offer a service for the Opportunity Zone investment community called OZ Pitch Day, where fund managers of Opportunity Zone funds present their investment offerings to high net worth individual investors. That's another website you can use. It's our own, ozpitchday.com, right? We've got an event coming up in a couple of weeks here. But if you can create content on your own website or on your own social media account at whatever platform, whether it's YouTube or Spotify or Apple Podcasts or Twitter, now X, or LinkedIn, I mean, those are huge. And I actually just want to point out, I'm going to share on my screen here, one of my favorites. I think this person is doing it as well as anybody I've seen in the multifamily industry, and he's in my backyard too. He's in Dallas. So this is Barrett Lindbergh. He's a prominent multifamily real estate investor in Dallas, and he tweets all the time, and he's got a huge following. He has almost 60,000 followers now, and just putting together this type of content on Twitter day in and day out for years and years and years has gotten him a lot of followers and a lot of interest, to the point where he has people coming to him now. He has people coming to him saying, hey, I like what you're talking about on Twitter. I like the content you're creating. I like your investment strategy. How can I invest with you? He has people coming to him now. And this is not a get rich quick thing, right? No. I mean, this takes a lot of time and a lot of effort. You have to show up day in and day out for many years, right, Andy? So it's not easy, but that's one example of a website, I guess, of where you can advertise your fund or your investment strategy to investors.
Yeah, what was the phrase? It was either you or Ashley used to, the flywheel, right? The mechanical analogy, the
flywheel, yeah.
Yeah, and so it's by the way, I don't think it's realistic, especially if you're a small team or like a one woman, one man show, that you're going to be publishing content and succeeding and getting this big audience on all of these platforms, right? If you're like, I'm going to build a huge Twitter following, and
it can take months and years.
Yeah, and it's unlikely that you're going to be good at all of them. So my advice: pick one or two, and always email. So like whatever medium you're using to tell your story, it should always be paired with email, in my humble opinion.
But why email? Why do you like email better than Facebook or Twitter or LinkedIn or YouTube?
Well, man, there's so many.
I have my answer, but
well, I got two questions. Well, two answers. One is you own your list. The money's in the list, and you own your list. But the other, in theory, with your Twitter followers, that's a list of people, but you don't own it, right? Like ultimately, you're stuck on the Twitter platform, or you're stuck on the LinkedIn platform. With email, and like if you're on MailChimp and one day MailChimp is like, hey, you sent too many emails, you're spamming, we're kicking you off. You can still export a CSV, as far as I understand, of all those email addresses and take them with you to another email platform. So you own the list.
Yeah, absolutely. I mean, that's exactly what I was going to say, Andy, is on these social media platforms, you can build huge audiences, but at the end of the day, you don't own the list. You can't really go outside of the platform. But yeah, with MailChimp, I mean, you nailed it. I mean, you own those contacts. You can take them anywhere with you. You can email them anytime, and you're going to hit their inbox, and it's a great strategy. Again, though, if you're a first timer and you're starting from zero, I would encourage you, start building that email list now.
Exactly.
Start building that Twitter following or YouTube following or podcast following or Facebook following now. Because there's an ancient Chinese proverb, Andy, which is the best time to plant a tree was 30 years ago, but the second best time is today. So
yeah.
if you didn't do it 30 years ago, at least get it started as soon as you can. But that's not going to bring in investors overnight. Obviously, that's the type of thing that snowballs slowly and gradually over time. But then you show up day in and day out for a year, 2 years, 3 years, 5 years, and all of a sudden you've got a huge following, thousands or tens of thousands of people.
So to recap, Jimmy, kind of going back to the first question that we answered in this live stream, which is where are you going to find your first investor? Well, it literally might be your mom, right? Friends and family, right, is generally where a lot of people look for that first investor. Then kind of broadening out a little in your professional network, like that kind of CRM, the informal CRM, that network that you've built if you're a commercial broker or if you work in banking or whatever. But then lastly, either if you've already, kind of exhausted all of those leads, or maybe you have your first and second investor, but okay, now I'm looking for my third investor. Probably that investor is going to be from those 500 emails of folks who have opted into your email list, who already know you and trust you and have opted in to hear from you.
Right.
There's a very good chance that the person is already in that list. But if you don't have the list, then that's probably the best place to start. So totally agreed, Jimmy.
And then with that list, right? And this is really important also, you can build the list, but you can't just build it. You have to nurture it over time. You have to continually deliver value to them, and on a regular basis too. You can't just add them to your email list and then ghost them for 2 years. And then one day out of the blue say, hey, you want to write me a check for $100,000? That's not how it works. You have to build that relationship slowly but surely over a long period of time. Andy, I wanted to go to the phones again here. We got a couple of comments I wanted to read out. Shout out to William, who says, great show as always. Thanks, William, for watching. Really appreciate it. And then let's see, another YouTube user, Video of Homes. I'm not sure who this is. No first name here, but says so much great information on these. Thank you, Jimmy and Andy. So thanks everybody for watching today. Really, really appreciate it. Andy, what do you think?
I think your new microphone is so silky smooth. You were like, when you were talking about nurturing your email list, your voice just sounded so silky smooth. It was like, it was hypnotizing me. So I got to get one of those microphones.
Yeah. Well, maybe we'll get you set up with one next week. Little wink at you there, Andy. Stay tuned, folks. Andy might have a new microphone set up.
You never know.
Soon as next week. But Andy, this was awesome. Great stuff today. We're out of time. Thank you, Andy. And thank you, our viewers and listeners, for joining us today. Our next episode and live stream will be next Thursday and every Thursday. at 3 p.m. Eastern time. I invite you to attend the live stream and ask your questions about starting a fund or real estate syndication. So Andy and I can answer your questions in real time. And please be sure to subscribe to us on YouTube. And if you liked today's episode, hit that thumbs up button for us. And we'll be back next week with another episode.